Hi, everybody, and welcome to the Ask the Digital Bootcamp Experts video series. This is our first video where we're going to tackle the topic of that darn promissory note. I'm Eddie Oddo with First American Title.
And I'm Lisa Steele with Lode Holding Company. And today we have Camilia Martin joining us. And Camilia is a managing director at Falcon Capital Advisors, leading the firm's digital mortgage services. Camilia has more than 14 years of experience in mortgage finance and technology services with focused expertise in the implementation of electronic promissory notes, eNotes. Prior to joining Falcon Capital Advisors, Camilia had various senior level positions in the legal risk and operations department at MERS. So welcome, we're glad to have you today, Camilia. So Eddie, let's talk a little bit about this video series. First and last digital closing boot camp we had in Arizona was at the beginning of the year, and you know, a little has changed since then, right?
Yeah, just a little bit, I'd say. I'm not sure what's going on there, but we had a pandemic in my area, Lisa. And really what that's really pushed is a lot more urgency around and interest around digital closing and lower contact closings. More options are popping up like RIN, if you've heard of that, remote ink sign notarization versus RON. And I think overall there's just a ton more awareness about the need for digital closings, from lenders to realtors to settlement companies, you name it. Adoption's not quite where we'd want to see it for those enthusiasts that we are, but there's certainly a lot of awareness and urgency going on.
Absolutely. And there's certainly a lot of questions out there from our industry, right? Because we kind of were catapulted out of necessity into the digital closing superhighway. And so I think that it's a great opportunity for us to have these conversations upcoming to our boot camp, and that will be held. We're going to be virtual for our next boot camp, or this year's boot camp. It will be held August 18th, 19th, and 20th. And we'll talk a little bit more about it at the end, but mark your calendars today for that. And now we're going to pitch it to Camilia to talk a little bit about that darn eNote, because I'm sure some of us have had a little frustration in recent months with that darn note and the darn eNote. So Camilia, talk to us a little bit about, you know, what is the difference between paper note, eNote? Why can't we just have a copy of a PDF signed and call it an eNote? Talk to us a little bit about that.
Thanks. And one of my favorite things to do is talk about darn eNotes. So thank you for having me today. So one of the main reasons that you can't just sign the PDF note that you already have in your doc package and attach an electronic signature to it is, in addition to the key terms that a paper promissory note has, the eNote has those same key terms, but it also has some special language. So an eNote identifies itself as an eNote. The borrower is acknowledging that they're signing an eNote, they're attaching their electronic signature to it, and they're acknowledging things that if the lender ever needed to convert that eNote to a paper note, that they could do so. It also identifies the system of record for parties that will have rights or roles with regards to the eNote, the MERS registry, which I think we'll get to a little bit later. The version of the eNote that's commonly used in the industry, you probably hear this term a lot, Smart Doc version 1.02. Well, what makes it so smart? What makes Smart Docs unique is that there's a data layer, there's an HTML view layer, which is what the borrower sees, and then there's a layer that locks that data and view together. And this is critical because the borrower can only agree to what they're able to review and see. And then lastly, after the borrower signs an eNote, there's a digital tamper evidence seal that's applied to it. And that's a mechanism that can give investors and other counterparties a mechanism to make sure that nobody's gone in and made any changes to that eNote after the borrower has signed.
Excellent. Well, Lisa, I'm going to jump in and ask you a question too, because it sounds like there's a little bit of complexity going on there. So as a if I'm a lender and I want to move to eNotes, what is my path? What do I need to be thinking about? How do I go from here to there?
So my recommendation to lenders and really any type of mortgage industry participant that wants to start supporting eNotes is to start with the process. Make sure you understand the fundamental differences between eNotes and paper notes. There's some procedural differences. There's certainly different technical components that are needed to support eNotes. But starting with the process is the best way, because ultimately it's a business process reengineering effort. You also really have to understand various factors related to your business and specific to your business. Who are your counterparties? What's the readiness of those counterparties? What can your tech providers already provide you? What components do they have that will support your use of eNotes? Or do you need to integrate or add new technical providers to your tech stack? Also, you want to understand things like regulatory considerations, and those are all going to be specific to you, right? What states are you doing loans in? Who are those loans going to? If there's any sort of compliance or regulatory requirements related to that, that's all going to drive your personal digital mortgage or e-closing strategy. So those are all important places to start.
Excellent, thank you.
So with the benefits, we talked a little bit about the benefits, and with the benefits that are available by using eNotes, what have you seen as the state of implementation for the industry? Do we have a lot of lenders jumping on board and getting in the eNote game, or is it still kind of a slow process?
Yeah, so the conversation has definitely shifted from nice to have, what are the benefits, what would my ROI be, to must have, right? I need a mechanism to allow closings to occur with limited or even no physical contact. So the state of adoption right now, just this past month in May, we saw over 31,000 eNotes be registered on the Mersey registry. That sounds like a really small number. But for reference, that was double the number that was registered just this past January. Or to give another perspective, there were just over 127,000 eNotes registered in all of 2019. And through the end of May, we're already over 112,000. So adoption's happening. I think we'd all like to see it moving more quickly. Still roughly at, I'd say, 3% or just under 3% of overall loans originated in the US are utilizing electronic promissory notes. And there's some reasons for that. So we just talked about counterparties. And from a lender's perspective, if I don't know where that loan's going to go before it goes into the secondary market, if I don't know who I'm selling that loan to, it's more difficult for me to have done it as an eNote, but that's changing. So GSDs have been doing eNotes and accepting eNotes, I should say, for well over a decade. And now we have some larger players that are now coming into the market and also accepting eNotes. Wells Fargo, PennyMac, Plaza, Mr. Cooper are all examples. We also have 16 warehouse lenders today that will fund an eNote. So those are all roadblocks that have come down and are continuing to come down, and will help kind of pave a path for increased liquidity and increased adoption.
Very nice.
Very good. Well, Camilia, it sounds a little bit complicated, but it also sounds quite doable, and it sounds like there's a lot of momentum moving forward. And the changes that have been thrust upon us over the past several months and the awareness and everything else is really what's pushed us to do this video series. So we're going to continue to have these conversations and answer your questions through this video series, and as well through our digital boot camp coming up in August. So keep posting your questions to alta.org/Ron. Our next video in this series is called Boots on the Ground, the Inside Scoop. And we're going to get some real life real life experiences from escrow officers and closers and processors that have been dealing with different types of e-closings over the past few months. So make sure you keep an eye out for that.
Absolutely. Great stuff. Thank you, Camilia, for joining us. We could have easily spent an hour on this today. So what's exciting is there will be an opportunity for all of us to jump in and hear a lot more in-depth information on this at the Digital Boot Camp. We'd like to thank Qualia for their sponsorship and support of our upcoming virtual digital closing and e-mortgage boot camp. We appreciate your support. Thank you very much, Qualia. And also we thank all of you for joining us here today. We hope you found this very informative, and we look forward to seeing you at our virtual boot camp in August.
Bye-bye.
Bye.
Bye.